Okay, so let's begin the next chapter in our syllabus, chapter number 13, amalgamation of companies. So, this standard is basically from AS14, and very easy to remember. You can remember this by way of Feb 14. So, what's so special about Feb 14? Black Day. Black Day, because there were freedom fighters who were being hanged that day. But I know what's your, with that smile, I could easily guess. Uh, okay, so what exactly happens on Feb 14, which we are not going to discuss, but similar thing, AS 14 also says in amalgamation of companies. So there are different types of amalgamation in this chapter. I am not going to distinguish. So there is an amalgamation wherein a weaker company acquires a stronger company. There are amalgamation where a stronger company will acquire weaker company. There are amalgamation where two companies will come together and they will form one new company. So like that, multiple combinations are possible. Let's discuss one by one. So the first one, the stronger company acquiring a weaker company. Example, Satyam and SPI Cinemas. So, sorry, not Satyam, PVR. PVR and SPI Cinemas. SPI, it has its presence only in South India and predominantly in Tamil Nadu. There were 7, 8 theaters, but PVR was famous across the country. So PVR has acquired PVR has acquired SPI Cinemas. So that is an example of a stronger company acquiring a weaker one. Then Vodafone and Idea, these two were competitors. They came together and formed a new company, VI. So this is also an amalgamation. Then next, I have been telling example of that Kingfisher hostel takeover. So Deccan Airways was taken by Kingfisher. So one company purchased the other company. The other company was still there. The other company was still there, but legally one company has acquired the other one. This is called acquisition, but it is also included in the word amalgamation. And finally, Bhaiya, is it possible that a weaker company acquires a stronger company? Yes. This scenario is called reverse merger. And ICICI Bank, what you see today, one of the largest India's private sector bank, is an example of reverse merger, wherein ICICI was in the stage of liquidation. Few more days of their operation and they would have winded up. But that's when the reverse merger happened, and we all know what stage is at ICICI Bank now. So now I'm not going to bore you with too much of theory. Directly, we will start the chapter. Now, after I complete the chapter, we will go and refer AS 14 because 95% of the chapter, 95% of the standard will get covered here itself. So, amalgamation of company here, you need to understand two technical words: transferor company, transferee company. Transferor company and transferee company. And these words are not new to us. We have been hearing from our Contract Act. Offeror, offeree, promisor, promisee, all these words. So now, not to complicate this, in the class I'll be using it as purchasing company and selling company. In the class, I'll be using purchasing company and selling company. And as the literal name goes, purchasing company is that company which is purchasing the other company, and selling company is that company which is selling. But we should, at the same time, we should also know which is transferor and which is transferee. Tell me now, purchasing company is transferor, transferee, transferee, purchasing company. Purchasing company is transferee, and transferor company is selling. Everyone. So transferor is the selling company, transferee is the purchasing company. Then next technical word. Now, will anyone sell the company for free? No, no one. So there is some amount you have to pay to buy the business. We have already learned CA Foundation and 12th standard. When you acquire a business, so when you acquire someone's business, will someone sell their business for free? Not at all, not at all. So you have to pay them something that is called purchase consideration. That is called purchase consideration. So, who will pay purchase consideration to whom? Leave transfer or transferee. No unnecessary confusion. Whoever purchases, they pay the payment. You purchase clothes, you will make the payment. You purchase food, you will make the payment. Same way, the transferee company or purchasing company, they purchase the company and purchase consideration will be paid by them. Will be paid by them. To whom? To selling company. To selling company. Now, there are two types of amalgamation broadly which is referred in AS 14. Amalgamation in nature of merger and amalgamation in nature of purchase. Amalgamation in nature of merger and amalgamation in nature of purchase. Now, yeah, when it will be amalgamation in nature of merger, when it will be amalgamation in nature of purchase, 5 conditions prescribed. Those 5 conditions are cumulative condition, means all the 5 should be satisfied. Even if one condition is not satisfied, then it is amalgamation in nature of purchase. If all the 5 conditions are satisfied, then it is amalgamation in nature of merger. Everyone, now what are those 5 conditions? You'll write. Start writing notes, everyone. Amalgamation of company, chapter number 13. Chapter number 13, amalgamation of companies. Revision note. Amalgamation of companies. Strictly revision note. All this you have to revise one day before the exam. Everyone? So, point number 1, types of amalgamation. Types of amalgamation. Types of amalgamation. From there, pull 2 arrows. Left and right. Left side merger, right side purchase. Left side merger, right side purchase. Merger, pull a down arrow. Merger, pull a down arrow. And write pooling of interest method. Merger, pull a down arrow. Pooling of interest method. Pooling of interest method. And purchase, pull a down arrow. Purchase, pull a down arrow. Purchase method. Purchase method. Now, whatever I am going to teach you here, cut, copy, paste, CA final for 10 to 15 marks. Whatever you are learning in this chapter, cut, copy, paste 10 to 15 marks. Whatever consolidation I teach you here, cut, copy, paste final 10 to 15 marks. So these 2 chapters, from examination point also important, from CA final point also it is important, and real life scenario also it is important. So now point number 2. Conditions to be satisfied. Conditions to be satisfied. Conditions to be satisfied for amalgamation in nature of merger. Conditions to be satisfied for amalgamation in nature of merger. Point number 1. All assets and liabilities are transferred. All assets and liabilities are transferred. All assets and liabilities are transferred. Point number 2. Now, transferred from whom to whom? From selling to purchasing. Whatever assets are there in selling company books should be transferred to purchasing company. Now, if you are telling, yeah, I am ready to sell my company, I am ready, but I will not sell my furniture. I will not sell my TV because sentiments involved. Sometimes might be possible. I am not ready to sell my formula, intangible assets. then in that case, it will be amalgamation in nature of purchase. Amalgamation in nature of purchase. Point number 2. All assets and liabilities, all assets and liabilities should be transferred at book value. Should be transferred at book value. Should be transferred at book value. Now, what is this? Now, let's say for example, in my books, the value of land is 10 lakhs. Market value 1 crore. Now, when I sell the company, the other person will tell, okay, market value 1 crore. Now only I am acquiring. So, in my books, I'll recognize at 1 crore. That part is also right. The person who is buying the asset is telling the present value is 1 crore. I'll record it 1 crore. Fair enough. But then it will be amalgamation in nature of purchase. If you transfer at book value, in my selling company also 10 lakh, purchasing company also 10 lakh, then it is amalgamation in nature of merger. Point number 3. Same business should be continued. Same business should be continued. Whatever selling company is doing, purchasing company should do. Now, bhaiya, when you call same business, let's say for example, I am acquiring ITC. Example. Now, ITC we all know is into hospitality business. Yes. Now, I am closing the hotels and starting catering in the name of ITC. Will it still be bhaiya in the same business? But catering is also hospitality. Specialized, okay. What is the point I gave? Same business. Whatever selling company was doing, purchasing company has to do that. If he was having hotel, you should also have a hotel. You do anything beyond that, that's okay. That's a different story. But whatever selling company is doing, whether purchasing company is doing or not, if the answer is yes, then it is merger. Otherwise, purchase. Point number 4. 90%. Point number 4. 90% of shareholders. 90% of shareholders of selling company are shareholders of purchasing company. Are shareholders of purchasing company. 90% should be same. 90% should be same. See, now let's say for example, in my company, all the 40 of you are shareholder. I am selling my company. Now, the other party who has purchased my company, he gave shares to all the 40. And in that, all the boys, they sold their shares. Now tell me, it will be merger or it will be purchase? It will still be merger. All the 40 of you, you got the shares. All the 40 of you. So 90% shareholder of selling, where shareholder of purchasing. Yes. So in that case, whether you sell or not is secondary. You keep, you sell, that is your point of view. Naman? That is your point of view. But are you allotted the shares of the new company? Yes. Then it is merger. Last point. Purchase consideration should be paid by equity shares. Purchase consideration should be paid by equity shares, except fractional shares. Except fractional shares. Now, Bhaiya, what is this? Fractional shares. First, let me tell you fractional shares. Now, let's say, for example, my company, I have 100 shareholders. My company, we have 100 shareholders. Now, Reliance wants to acquire me. Now, Reliance says, for every 3 shares in your company, I'll give you 1 share. Reliance says, for every 1 share, I'll give you 3, every one. Now, how many shares will I? Yeah. 1 for every 3. Correct. This ratio is proper. Same thing in bonus we have learned. Reliance says, I'll give you 1 share for every 3 shares in your company. So now 100 into 1 by 3, how many shares will I get? 33.33 everyone. 33 shares Reliance will give. For 0.33, they can give me cash. For shares cannot be 0.33, 1/3 of a share not possible. For this 0.33, they can give me shares. That is fractional share. Now, for this 33, Reliance, if they give only in equity, then it is merger. If they give debentures, if they give preference shares, then it is amalgamation in nature of purchase. This 5 condition, is it clear, everyone? Now, Bhaiya, what is the difference? Both has different method. We will see in future. Today's class, our prime focus will be on calculating purchase consideration. Today's class, we will focus on computing purchase consideration. Now let's begin amalgamation. See here, 2 or more companies join to form a new company. Example, which example did I give? Hey, VI. VI. These two have come together to form a new company. Absorption. One company acquiring another. PVR. Any other example? Kingfisher and Deccan. That is also absorption. And blending of one by another, popularly known as absorption. Then, so in amalgamation, we have 2 companies. One is the selling company, one is the buying company or purchasing company. First, vendor or transferor company. We are not using both. What we are using? We are using selling company. We are using selling company. And second, vendee or transferee company. Purchasing company. Then this is called external reconstruction. Internal reconstruction, for few I have completed, for few I'll teach in future. But this is called external reconstruction. External means you go outside your entity. You go beyond your entity and you acquire or you deal with another company. Now, this is important theory question. If they don't ask problem, they might ask you this. The difference between amalgamation, absorption, and external reconstruction. This is important. I'll just touch upon 1 or 2 points, very, very simple and very easy. So, meaning amalgamation, 2 or more companies are wound up and a new company is formed to take over the business. Again, which example can we write here? Then absorption. In this case, an existing company takes over the business of 1 or more company. In this case, a newly formed company takes over the business of existing company. Now, Bhaiya, what is the difference between external reconstruction and amalgamation in first point? Huh?
When new company form होते हैं इसमें new company acquire company existing company new company form कर दिया उसमें newly form वाली
हाँ
में 2 existing company है वो दोनों मिलके एक new company.
Very, very clear. First day itself, everyone are sleeping. Just now, 1 minute back, I highlighted this. Amalgamation and external reconstruction, I highlighted. You can see here. Amalgamation and external reconstruction are same. There is no difference. There is no difference. So from first point of view, if you ask, there is no difference at all. Both are same. Then Bhaiya, why they have given separately? Because of the parties involved, which we'll learn in the next point. For first point, amalgamation and external reconstruction are same. Now, second point, minimum number of companies. Here, 3 companies. Vodafone, Idea, VI. There are three companies. But here only two companies are involved. Here only two companies. And here also two companies. And all these are mini, first and second, if you see at least only first and second column, if you see at least, so more than 2, 3, 4, any number of companies allowed. But in external reconstruction, they have used the word only. Then only one resultant company is formed. VI. Vodafone is dissolved. Idea is dissolved. One new company. No new resultant company is formed. Because that company is already existing. Purchasing company is already existing. They're just purchasing a new company. So it is already existing. Only one resultant company. What is the difference between first and third? Same. Then objective. Here, cut competition. I don't understand how they will beat competition VI, but they are telling objective is to cut competition. वोडाफोन आइडिया को लगा हम दोनों साथ में आ जाएंगे, will become super power. None of them realize both don't have power. यो सब recording हो रहा है. Okay. Now absorption is done to cut competition. भैया again cut competition. And last, to reorganize the structure. So the first and second, the objective is same. PVR, why they have acquired Satyam? Why those technical example in our CA industry itself? Are you guys aware? Right? Two big amalgamations, they have taken place at a very high valuations. There is a company called Veranda Limited. Veranda Limited. So this is a part of Kalpataru Groups, which is AGS Cinemas. So these guys are the one who first acquired JK Shah. JK Shah was a private limited company. They acquired for some 400 plus crores. Then they acquired Srinivasa Academy. भैया ये academy का नाम ही नहीं सुना है. They are pioneers in CMA in Chennai. So then now they acquired BB Virtuals for some some 100 plus crores. So they acquired this. Now why they are doing this? Veranda is that they are acquiring one by one. Why? Because competition. They are ready to pay premium. It's okay. Navya, it's okay. It's okay if they have to pay premium. It's okay. But they want to eliminate competition. Now amalgamation in nature of merger, I have explained. In these 5 conditions I gave you in very short. See, first point, all the assets and liabilities of the transferor become after amalgamation assets and liabilities of transferee. Which point? First point. Shareholders not less than 90% of the face value. Fourth point. So I might have modified the order, but all the points will be there. The consideration is discharged by the transferring company only by issue of equity shares. Fifth. Then business is intended to be carried. And this. Why bhaiya did you shuffle? Because first and second point are related to assets and liabilities. Fourth and fifth point are related to shareholders. That's why I merged these two and I have given it differently. That same 5 points in table form they have given. Now purchase consideration. If we complete this, today's class over. Purchase consideration everyone. Now purchase consideration is given by purchasing company to selling company. Anytime bhaiya in reverse order. We tell in real life, no, I want to sell my phone. My friend said, even if you pay money and sell, no one will buy your phone. We use not real life, but that doesn't happen in corporates. And amalgamation, believe me, it is not at all an easy process. What we are learning here is only accounting of amalgamation. The law part of amalgamation, you learn at CA final. So law part, the Ind AS part, all those in CA final, you will learn in detail about amalgamation. Amalgamation requires court approval. And I have seen some crazy amalgamations. I'll give you one real life scenario. When I say crazy, literally it was crazy. So now in one amalgamation, what has happened? Now let's say, for example, you have to go to the court. You have to go to the court for their approval. And what court will do? They will appoint a person called as
Liquidator.
liquidator. This word suna hai. CA Foundation, Sale of Goods Act. So the court will appoint a liquidator. That liquidator will ensure he does all the base work for the amalgamation. Now, the one amalgamation I saw, sensitive issue, I cannot tell the name of the company. Now, let's say there were cost, depreciation, and WDV. Okay. Now, to keep it simple, there were 200 plus assets, but I'll keep it, sorry, 2000 plus assets. I'll keep it simple for you to understand. That let's assume there were three assets. Cost 100, 20, 80, 200, 60, 140, and 300, 100, 200. Now, how court gave the court will prepare the balance sheet and give it to you. So that the case which I am telling is a case of demerger. What happens in demerger? One company is broken into multiple companies. There is one company which is being broken into multiple. ITC is planning the demerger from last 3 years. You pick any year, 2024, 23, 22, you will find in the news they are planning the demerger. So ITC, we know tobacco, hotels, and FMCG, predominantly these three. Now ITC is planning to demerge all these three units. So different entities will be formed. Now, when different entity is formed, court is telling for company one in asset, the cost will be let's say 220 and WDV will be let's say 180. Now, Bhaiya, how did the court get 220? No one knows. How did court got WDV 180? No one knows. So what we have to do as an auditor, we should identify the assets. How court got 220? So what did we do? We went to the cost column and added few assets. Few assets total, we got 220. But when you total that WDV, it was not matching. Then we thought we'll change. We took WDV. We tried to match the WDV of asset total, it was matching. Then we matched the cost, it was not matching. फिर आपने क्या किया भैया? When cost and WDV both are not matching. So basically, what I am trying to highlight here, amalgamation is a complex process. If you did not understand the example also after lunch, high level example, ignore. Amalgamation is a complex process. It's not the case you go to the court today, they'll approve tomorrow, oh, day after tomorrow, amalgamation over. That's where I compare it with AS14. In India, do you think if you have watched two states movie, marriages are very, very difficult. First, boy should like girl, boy should like girl's family, girl should like boy's family, boy's family should like girl's family. Yes, कुछ नया बोल रहा हूँ. So, and after, if after everything also still some love is left, then marriage happens. Same way amalgamation. So, here, now purchase consideration, bhaiya, who will decide the purchase consideration? Who will decide the purchase consideration? They have not mentioned it here. There's a specific study called valuation. So, actually does that job better, but actually they charge a bomb. So I'm telling in terms of money. So there's a separate study, separate course called valuation. So in that valuation, you can go to a registered valuer and tell them, I want to acquire with that company. Please help me on the valuations. So that valuer will go to the company, analyze all that balance sheet. For valuation itself, will take 2 to 3 months. 2 to 3 months minimum you will take just to decide on the purchase consideration. Then they will go to the court. Court will ask creditors meeting, preference shareholder meeting, equity shareholder meeting. After all the meetings, court will take all the objections what people have raised, and if they are satisfied, then they will approve. Now, here, this we will write later. First, we will focus on understanding the concept. Purchase consideration can be computed in the following methods. All these methods we are going to use in all our problems. First, lump sum method. Where this word we have heard somewhere. Huh? Shasa. Huh? In debentures. When debentures are issued in lump sum, where debentures are issued in installments.
Yes, foundation.
CA Foundation, the degree which is at home, certificate. Backside you can write not worth. So lump sum is you pay this amount and say be happy. I'm acquiring your company. Everyone? So lump sum. You pay an amount and acquire the company. Story over. Now what is the logic behind that amount? No one knows. Now I want to acquire PVR. Example में तो we can have no. I want to acquire PVR. Now you tell what figure we can acquire for. 100 crores में JK शाह भी नहीं आता. 1000. Have anyone seen the market cap of PVR? We will see and then you decide. बुला लो ना. 135.71 billion. And this is as on December 2024. 135.71 billion. 100 crores. So now, 1 billion is how much? 1 billion is 100 crores. So the current market valuation is 100 crores. 13,500 crores. 100 crores में PVR देख खरीदना है. Now 13,500 crores is the market valuation. Now do you think that guy will sell you his company as it is? You have to pay minimum. Now PVR, again we know it is operating more like a monopoly. Here if I ask you in the class which status shall we go, 1 or 2 will tell other status, all the others PVR. Yes, only one person I will tell Albert, Mahalakshmi. Maybe better hai. So lump sum, Harvi, lump sum method is the method where you pay one fixed amount to acquire the company. Then next, net payment method. Then what happened in net payment method? Okay, let's say for example balance sheet. In balance sheet you have certain assets, then you have equity shares, you have preference shares, you have debenture holder, then you have current liability. Now in net payment method, this company, the purchasing company will tell, I'll take this. Don't worry. Debenture holders, I will pay. Preference shareholders, I will pay. And equity shareholders, I will pay. Means the equity shareholders of selling company, they will get money from purchasing company, or purchasing company will settle all this. Everyone, this method is called net payment method. First method, I'll give you 10 crores. You decide whom to give, what to give. Second method. So second method, net payment method, I will take all the assets, I'll take external liabilities, but this equity, preference and debentures, I will pay personally. This method is called net payment method. Next, net assets method. Total asset minus outside liability. Total method minus outside liability. Whatever is the net asset, that much I will pay them. And intrinsic value. Intrinsic value, very, very simple. In the previous method, we calculated net assets, no? Net assets by total shares will give you intrinsic value. Net assets by total shares will give us intrinsic value. So now here what happened in intrinsic value? Say for example, PVR intrinsic value is 10,000. Jitender, intrinsic value 1 lakh. Why I should underestimate myself? Now I will tell PVR for every 10 shareholder of yours, I'll give 1 share of my company. So this is intrinsic value. This is intrinsic value. Everyone, yes? Okay, so our all the theory is done. Now finally we'll start the best part. Illustration number 1. Now in this chapter, presentation is very, 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 for that matter, the entire subject it is important. But this chapter I am very particular because I have been observing from last few attempts, every attempt they are asking one full-fledged problem for 14 marks. So you can take this like a compulsory question. You don't have the choice to skip the chapter. You can skip few AS, you can skip buyback if you want, but you cannot. You can skip branch in worst case it is not fitting your mind, but in any case you cannot skip amalgamation. Now let's begin. Illustration number 1. S Limited is absorbed by P Limited. So S Limited is purchasing or selling? Selling. Because it is absorbed. And who is buying? So P Limited is. One more in, P for purchase, S for selling. Always in the exam. But they have stopped asking P and S. If you see your workbook problem, initial problems, you'll have P and S. So there's no confusion at all. But I'll give you intentionally ulta. You see S and P will be there in your problem, but other way around. So never do all this gambling. S Limited is the selling company who is selling, and P Limited is purchasing. Give the following information on the date of absorption. Sundry assets. Bhaiya, what is sundry asset? Total asset. Share capital, they have given reserve, debenture, trade payables. So total and see whether it is 13 lakhs. Yes. But you should not do this in exam. Not required. Now, P Limited has agreed. Who is P Limited? Purchasing company. Purchasing company. They have agreed to issue 9% preference shares in the ratio of 3 shares of P for 4 shares in S Limited. First, all this you will discuss later. Tell me which method is this? This is intrinsic blunder. Very good. Net payment method. This is not lump sum. Because if it is lump sum, they will give in the question purchase consideration was 10 lakh, 20 lakh, 50 lakh. Then next method was net payment. So in net payment, equity share they will give separate, preference share they will give separate. Here they have given see preference share, debenture, and equity. All the three they are paying separately. And next was net asset. And this is the default method. This is default method. Like how at joint product and byproduct we had NRV at split off. NRV. So like that, net asset is the default method. Nothing given in the question, you will follow this. And final intrinsic value. Intrinsic value. So to 9% preference shareholder of 100 each in the ratio 3 shares of P Limited for 4 shares in S Limited. The ratio will be 3:4 or 4:3 is very, 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 very confusing. So first we should understand how do we interpret the ratio. 1:4 indicates one share for every 4. One share for every 4. Now, P Limited is telling, I will give 3 shares of mine for 4 shares of yours. The ratio is. The ratio is 3:4. The ratio is 3:4. Everyone.
Yes.
Then, to issue debenture holder in S Limited 8% mortgage debenture at 96 in lieu of 6% debenture in S Limited, which are redeemed at a premium of 20%. But yeah, what should we do for this? Ignore. Why? Debenture holders will never form part of purchase consideration. I repeat again, debenture holders will never form part of purchase consideration. So go back to your summary notes, point number 3. Point number 3, amount paid to debenture holder, amount paid to debenture holder will never form part of, purchase consideration, will never form part of purchase consideration. Everyone, is it simple? So we are debenture point, they have asked only the purchase consideration. I'll skip the second point. Now, to pay 20 per share in cash and issue 6 equity share of 100 each issued at market value of 125 in lieu of every 5 shares held in S Limited. So, for every 5 shares in S Limited, they will give 6 shares in P Limited and 20 rupees in cash. To assume the liability to trade payable means liability they will take over. You are required to calculate the purchase consideration. Everyone, bhaiya, then what is this for? This we will not use now. This will not use now. Just go through the additional information quickly. Okay, so shall I start? So everyone, no hurries, no rush. Please pay attention how I am preparing purchase consideration. For every amalgamation problem, this is the first step. Without purchase consideration, none of the problem can be right. So please pay attention. This is illustration 1. Calculation of purchase consideration. Calculation of purchase consideration. Particulars and 2 amount column, 1 inner column, 1 outer column. Now, which method is this? Net payment method. We will discuss in every problem, but nowhere we will write. Nowhere we'll write. Why, bhaiya? Because if your method, you are writing the wrong method in exam, it will lead to reduction in marks. And nowhere we expect you to write the method. So this is net payment method. For your reference, if you want, you can write. First, equity shareholder. बाद में. Equity shareholder. Or one second. First, they have given about preference, no? So I'll write preference first. Preference shareholder. Now to preference shareholder, what are we giving them? To issue 9% preference shares of 100 each in the ratio of 3 shares of P Limited for 4 shares in S Limited. So 9% preference shares in P Limited. 9% preference shares in P Limited. So calculation. First, how many shareholders are there? 2 lakh, everyone. 2 lakh is the preference shares and face value is 100. So 2000. So 2000 into 3 by 4 into 3 by 4. That I should write here without fail. 1500, 9% preference shares in P Limited. 1500, 9% preference share in P Limited, which is 1,50,000. 1,50,000. Everyone, are you all able to follow? The ratio is 3:4. For 2000 shares, I'll give 1500, which I have written here. 1500, 9% preference shares in P Limited. Now, continuing further. Equity shareholder. So, to equity shareholder, what they are giving?
Equity shares.
One second, I missed out one more thing. Of face value 100. Of face value 100. So every time you write 3 things without fail, you have to write quantity. How much preference shares or how much equity you are giving? Chaman, how much preference or how much equity you are giving? What is the rate? For equity shares, no rate will be there. And third, what is the face value? And then equity shareholder. For every equity shareholder, how much equity shares they are giving? For every 5 they are giving 6. So now there are 5,000 equity shares. So 5,000 into 6. So 6,000 equity shares in P Limited of face value 100. How much? 6,000 into 100 rupees, 6 lakhs. Bhaiya, why did you write in inner column? Because equity shareholder, we are also paying them cash. So cash. For every shareholder, 20 rupees cash. So to issue 6 equity at paid 20 per share in cash. There were 5,000 shares, 20 in cash. So 1 lakh. Total to equity shareholder 7 lakh and total purchase consideration. Now the common mistake which majority of the students will do in the exam. Bhaiya, we calculated 6,000 shares. On 6,000 shares, they'll calculate 20 rupees. Problem gone. 6,000 shares are the new shares which I am issuing, which purchasing company is issuing, but selling company has only 5,000 shares. For every share, I am giving 20. So this 5,000 are the shares of selling company. Everyone, is it clear? Write quickly. क्या मस्त सो रहे एक एक जन है. संबंध तो zoned out हो गए. हाँ, कहाँ पे दिया? आप लिखो फिर मैं बोलता हूँ. Okay, now intentionally I am telling you all the answers which might go wrong, and here also equity shareholders, it is wrong. It is wrong. Why? Bhaiya, face value of that share is 100. Market price is 125. So now let's say for example, I have a non-depreciable asset, land. Land I purchased for 10,000, now it is worth 1 lakh. Now, when I purchase goods and I'm giving land, what is the value of goods? Everyone, please understand. I purchased the land for 10,000, but today, the value of that land is 1 lakh. I purchased something and gave that land. So what is the value of the thing which I purchased? 1 lakh. That's why I'm giving value worth 1 lakh. So now, bhaiya, what is the relevance here? I'm giving 6,000 shares, bhaiya. I'm giving 6,000 shares, but one share is worth 125. So this into 125. 7 lakh? 750. So this will become 850 and this will become 10 lakhs. Everyone. So here the price of the share, it is not 100, it is 125. So my purchase consideration, I am paying him equivalent to 125. Please update your uh, answers accordingly. If market value is not given, we'll write face value. But here in this problem, we have market value.
If it is merging, it would be at the value cost. If it is purchasing company, it will be at the market value.
ये कब बोला?
रियल वो मटेरियल वो असेट का रियल जो कॉस्ट होगा अगर उसमें देंगे तो वो मर्जिंग होगा ना.
कहाँ लिखा है ऐसा? नहीं, आप असेट्स का एंड इसका कोई कनेक्शन ही नहीं है. So here again repeating, this is net payment method, because equity share we are settling separately, debenture we are settling separately, and preference shares we are paying separately. All the three we are paying separately. Moving forward, see the answer and see the size of the question. Now moving forward, illustration 2. Following is the balance sheet of A Limited as on 31st March. They have given the entire balance sheet. Notes to accounts also given. B Limited agreed to take over the assets and liability on the following condition. So B Limited is purchasing company and selling company will be here they have asked us to calculate just purchase consideration. Keep that in mind. Discharge 15% debenture at a premium of 10% by issuing 15% debenture of excellence. Ignore. Payment to debenture holder will never form part of. Perfect. Let's move on. PP at 10% above the book value and investments at par. Okay. Current assets at a discount of 10% and current liabilities at book value. Preference shareholder are discharged at premium of 10% by issuing 15% preference shares of 100 each. Equity, issue 3 equity shares of 10 each or every 2 equity shares in B Limited and pay the balance in cash. Beautiful problem. Now you guys will tell me which method is this. Net, net asset, net payment, net asset, one, whatever you guys say. Net asset, net payment. net asset, confusion we are. So this problem is a combination of net asset and net payment method. Your second problem, method ही confused है. This is a combination of net asset method and net payment method. Before we start, point number summary note 4. Point number 4 in your summary note. Point number 4. Point number 4. Purchase consideration, from there pull to 4 arrows. Purchase consideration, from that pull 4 arrows. Left corner, lump sum. Lump sum will never come in exam because they have to give purchase consideration. Lump sum they cannot ask us to calculate. So how they will ask in exam? Never, never. Then second, net payment method. Pull a down arrow. Individual payments are made to equity shareholder, preference shareholder, and debenture. Individual payment are made to equity shareholder, preference shareholder, and debenture. In this problem, they are doing. See, point number, last 2 points.
Yes.
Individually, they are paying preference share and equity shares. Where debentures, they are not paying individually. Debenture 7,000. Are they paying individually? Yes. Point number 1. Point number A, A, B, and E. They are making payments individually. So this problem, net payment confirm. Net payment confirm. Third, net assets method. Net assets method. Pull a down arrow. Total asset minus outside liability. Total asset minus outside liability. Pull a down arrow. If agreed values are given, consider that otherwise take book values. Now in this problem, agreed values have they given? Yes. PP 10% above book value. This is agreed value. Investments at par, agreed value. Current asset at 10% discount, agreed value. Everyone. So this confirm net asset method is also there. And last, intrinsic value. And you can pull a down arrow. Intrinsic value is equal to net assets divided by total shares. Net assets divided by total shares. These are the 4 methods. Everyone. Now, in this problem, what has been confirmed? Net payment is also there. Net asset is also there. Go through these 5 points quickly before I start the solution. I'll do. Okay, can I begin?
Yes.
Yes. So I'll use the same format what I've used for the previous problem. So this is illustration number 2, calculation of purchase consideration, preference shareholder. Now, preference shareholder, how much are we paying them? Preference shareholders are discharged at a premium of 10%. How much preference shareholders do we have now? 750. If it is in 3 zeros, you have to put your answer also in 3 zeros. So 750, 7.5 lakh, 7.5 lakh. But preference shareholder is 7,500. And we are paying 10% premium. So 750 plus 10% by issuing 15% preference shares of 100 each. 15% preference shares of B Limited. 15% preference shares of B Limited. 750 plus 10%, 825. But I said you guys, without fail, we have to write the quantity. The quantity. So 8,25,000 divided by 100. 8250, 15% preference shares of B Limited. Everyone of face value 100. Everyone. So please don't get confused. This 15%, this 15%, we are issuing them at a premium. Sorry, 10% premium. 750 is the face value. We are giving them 10% premium. Then equity shareholders, we are paying both cash and equity. Now, for this, we have to calculate calculation of net assets. But before that itself, here we can write equity shares. Issue 3 equity shares of 10 each for every 2 equity shares in B Limited. The ratio is 3 is to 2 or 2 is to 3. 3 is to 2. For every 2 shares, I'll give 3. For every 2 shares, I'll give 3. So there are 1.5 lakh shares. So 1.5 lakh shares into 3 by 2. How much? 2 lakh. 2,25,000 equity shares in B Limited of face value 10. So 2250 because the numbers are in thousands or here itself for safety purpose amount in thousands. Okay, now balance they said in cash. Balance they said in cash. So that I have to find out. Calculation of net assets, particulars and amount. So net assets, how do we calculate net asset? Total asset minus outside liability. So total assets, first is property, plant and equipment, note number 4, land and building. Can I take a 3250? No. Add 10%. 3250 plus 10%. 3. Any other PP? No, only one. Then non-current investment, where should I consider? Investments at par value. How much? 600. Then, so after PP, these 3 items can I cut copy? Inventory, trade receivables and cash. Okay, there was one adjustment. Current asset at a discount of 10%. All the three are current assets? Yes. So 200 minus 10%. I am not doing. 180, 180, 180, and 100 minus 20, 10%. Current assets at discount of 10%.
100 minus 10%.
Cash 100 ही रहेगा. Think once again. 90, 90, 100, 90, 100. Bhaiya, how cash will become 90, bhaiya? 100 rupees cash, it will be 100 only, no? Don't question the question. So, might be in the books they are showing higher cash. Actually, it is not there. So, that's why if I gave clearly in the notes, if agreed values are given, take that. And agreed value, current asset at 10% discount. So, cash is part of current asset. Then why doubt? Why doubt? 90. It is 450. So, but why did I write this in inner columns? So 180, 180 and 90. Then, so all the assets I have taken. So total assets 4625, 4625 everyone. Less liabilities. Less liabilities. Now, will I take trade payables?
Yeah.
Then long-term borrowing, note number 3. 15% debentures. Now, we have 15% debenture. Discharge 15% debenture at a premium of. So they are paying 10% premium to debenture holder also. 700 plus 10%. That's okay. Then any other outside liability? No, share capital, reserves and surplus. That is internal. That is internal. So total liability. Yeah.
127.
Net assets. 4625 minus 1270. 3355 everyone. 3355. Now, bhaiya, what is this 3355? This is the total. Total purchase consideration 3355. 3355. So total purchase consideration I have written. From that subtract these two amounts.
280.
280. 280. Now, what students they do know? Creativity in exam, I am telling the wrong answer. They will calculate 3355 properly. But then they will subtract only 2250. They think this net asset is entirely belonging to equity shareholder. So they will subtract only equity. They will subtract only equity. Second mistake, debenture, they will ignore premium. Third entry, they will ignore debenture itself. Considering debenture anyways you are paying, so they will not consider. All these are few examination errors. Come on. Two more problems. I am winding up today's class. Two more problems. Come on, make it quick. Okay, so now we'll move on to the next problem, problem number 3. Let us consider the balance sheet of X Limited as of 31st March 20X1. Shareholder fund, share capital, reserves, a few items they have given. I'll directly move to the last part, compute the purchase consideration. Y Limited takes over X Limited on 10th April. So Y Limited is purchasing company, X Limited is debenture holders are discharged at 10% premium by issuing 15% own debenture of Y Limited. What should be done? 14% preference shareholder of X Limited are discharged at a premium of 20% by issuing necessary number of 15% preference shares of Y Limited. So this they have given. What is the ratio for preference shareholder? Very good. 1:1. 1:1. For every preference share, I'll give only one preference share. But the beauty is premium of 20%. I'll give them 20% extra. Intrinsic value per share of X Limited is 20 and Y Limited is 30. Y Limited will issue equity shares to satisfy the equity shareholder of X Limited on the basis of intrinsic value. However, the entry should be made at par value only. The nominal value of each equity share of Y Limited is 10. Tell me which method is this? Intrinsic value, and with intrinsic value we will calculate purchase consideration. And by net payment, we will discharge purchase consideration. Everyone pay attention. I'm getting deeper into the concepts. By intrinsic value, we will calculate purchase consideration, how much we have to pay. But by net payment method, we will discharge, we will settle the purchase consideration. Everyone? So yes, as usual, go through this quickly and then we shall start. Yeah?
क्वेश्चन पूछा कंप्लीट परचेज कंसीडरेशन
No, whenever they ask, we have to show how much to equity, how much to preference. We have to just focus on the third and fourth point. So let's begin. As usual, the same format. So illustration 3, purchase consideration. Yeah, now also we are giving to both equity and preference, right? So first, 14% preference shareholder of X Limited. X Limited is selling company. Are discharged at a premium of 20%. So how many preference shares do they have now? 2,500. 20% premium means 30,000. 3,000. So 2,500 plus 20%. 2,500 plus 20%. It is 3,000. But 3,000 and here also the number are in thousands. So this is, can I say 30 lakhs? Everyone? 30 lakhs. Now 30 lakh, face value 100. So how many preference shares? 30,000. So 30,000 and what is the percentage? 15. So 30,000, 15% preference shares of Y Limited, face value 100. This is 3,000. This is 3,000. I don't think we are using this column. Equity shareholder. Equity shareholder. For that, we have to calculate intrinsic value. Sorry, intrinsic value is given. Intrinsic value is given. Tell me now the ratio will be 20 is to 30 or 30 is to 20. So it will be 20 is to 30. Everyone, 20 is to 30. Always remember first what purchasing company is giving, what that will come first. If ratio is for every 4 I am giving 1, it is 1 is to 4. Means purchasing company is giving 1 share for every 4 shares. 1 share for every 4. So 20 is to 30. 20 is the market intrinsic value of purchasing company. 30 is the intrinsic value of selling company. So 7,500. Yeah.
Y Limited is purchasing.
Y Limited takes over X. Okay. Yeah.
बोला intrinsic value of Y is 20.
Okay. Okay. Intrinsic value of X is 20 and Y is 30. Y is 30. The ratio is 20 is to 30. How much equity shares do we have? 7,500. So 7,500 into 20 by 30. 5,000. 5,000 everyone. Yes. So now what will be the total purchase consideration? 8,000. Total here I don't think we have cash and all. No. So the total purchase consideration is 8,000. That's all. Come on, write quickly. Huh? Yes, 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 yes. 5 lakh equity shares of 10 or 100? It's 10. Write quickly. Done, everyone? Moving forward, the last illustration for the day, illustration number 4. Neil and Gagan amalgamated to form a new company, and following is the balance sheet of Neil Limited and Gagan Limited. Now, who is the selling company? Selling company. Neil and Gagan both are selling company. Purchasing company. New company is the purchasing company. Balance sheet, they have given Neil and Gagan share capital, current liability, PP, current assets, and some details. Following is the additional information. The assets of Neil Limited and Gagan Limited are to be revalued as under. Whenever you get revaluation, immediately which method should come in your mind? Net assets method. Because only under net assets method we use agreed values. We use agreed values. The purchase consideration is to be discharged as under. Issue 24,000 equity shares of 25 each fully paid in proportion of their profitability in the preceding 2 years. So new company is clear. I'll issue 24,000 shares. I will issue 24,000 shares. To whom? Both companies put together. In the ratio of their profits. In the ratio of their profits. Profits for last 2 years they have given. Issue 12% preference shares of 10 each fully paid up at par to provide income equivalent to 8% return on net asset in the business as on this after revaluation of assets respectively. Yeah. Issue 12% preference shares of 100 each fully paid up. Sorry, 10 each fully paid up at par to provide income equivalent to 8% return on net asset in the business as on 31st March after revaluation. This, yeah. No, don't struggle so much. I will. You are required to compute equity and preference shareholder issued to Neil and Gagan and purchase. Basically, only purchase consideration. Anyways, in purchase consideration, equity and preference will be covered. Everyone. So third part, no load at all. First part, only 24,000 equity shares they will give. So relax, and let me begin. Easy, eh? Easy, eh? So calculation of purchase consideration particulars. And now there are two companies, Neil Limited and Gagan Limited. And to both the companies, they are paying preference shareholder, no?
Both are.
Now, C point, everyone, C point, you can tell whether they are giving this to preference shareholder, equity shareholder.
Equity share. Preference share there is equity.
Very good. They are giving preference shares, but to whom they are giving? Equity shareholders. Every where they are given to preference shareholder of S Limited. Yeah, default. And here in this problem, share capital, no equity, no preference. What we'll also do? No equity, no preference to shareholders. To shareholders. Neither we will give equity nor preference. But by default, it is equity shareholder. By default, it is equity shareholder. Now, first what they said, 24,000 shares they will give. Everyone. And Neil and Gagan on the basis of that profits. On the basis of that profits. So both the companies profit 475 and 525.
11,200.
So totally 24,000 shares. In that, Neil Limited 475 by 1,000 and Gagan Limited. So two shareholder looks very weird. Let's remove purchase consideration is enough. Number of shares. Number of shares 11,400, 12,600. Where we got the number of shares? We got the number of shares. What is the value per share? 25 each. So value of equity shares. So 11,400 into 25. 2 lakh 85,000 and how much?
3 lakh 15,000.
3 lakh 15,000. One part over there, one part over. Now preference shareholder. Preference shareholder, there is one more small part we have to do. One more small part we have to do. Preference shareholder, they are telling issue 12% preference share of 10 each fully paid off. No use. To provide income equivalent to 8% return on net assets. So first we'll calculate net assets. Okay, first we'll calculate net assets. Now they have given the revalued figure, plant and machinery and building, and they have given book values. Which one should I take? Revalued figures. Plant and machinery and building. Plant and machinery and building. 525, 675, 775, 648. So we got this PP. Then current assets. Take book value, nothing given, no. Current assets 163, 500, 158, 600. Then current liability. I'll total this. Total assets, then less liabilities. Liabilities, what do we have? Only current liabilities. How much? 623, 500, 557, 600. So we'll get net asset. 840 and 924. 840 and 924 everyone. They are telling issue preference shares so that they get minimum 8% of net assets. So 8% of net assets. 67, 200 and 73, 920 everyone. Now, this statement is telling you issue preference shares. You issue preference shares in such a way that the shareholder should get 67 200 and 73 920. But bhaiya, if I issue this many preference shares, what is the preference dividend? 12%. Everyone. So if I issue 67 200, 12% will be very less. So uh, preference shares to be issued. Preference share to be issued. So 67 200 is the return and return is 12%. Everyone calculate. So if I issue preference share of 560, 12% return, 67 200, that is 8% of net asset. That is 8% of net asset. Issue preference shares in such a way. Issue preference shares in such a way that they get 8% of net assets. Yes. So this is the calculation, and here 73 9 6 lakh 16,000 6 lakh 16,000. So we have got value of equity shares, then 12% preference share, 12% preference shares, 5 lakh 60,000 and 6 lakh 16,000. Total purchase consideration 845 and 931. 845 and 931 everyone. See, equity shares was straightforward. They said 24,000 shares I'll give in the ratio of your profits. Easily we calculated. But for preference shares, we had to calculate net asset. In that net asset, 8%, that much return they have to get, that much return. If they have to get this much return, this much of preference shares have to be issued. If you issue this preference shares, they will get the required returns. Everyone, please copy it quickly. Everyone done? Go on, write quickly. Then I have to give you some journals. Done, everyone. Okay, so now this completes the topic purchase consideration. Now I'll just give few journals and with that we'll wind up the class. Open your summary notes, everyone. Point number 5. Journal entries in the books of selling company. Journal entry in the books of selling company. Journal entry in the books of selling company. This is same cut copy paste dissolution chapter. CA Foundation partnership. So same cut copy paste, but I expect that you have not learned. And even if you have learned, please forget it for some time. I don't want half knowledge is always dangerous. I'll start again from the scratch. Even if you don't know, I just expect you to know the basic accounts. Debit if asset and expense increase. If asset or expense decreases, credit. That same basic expectation I expect you to know. So let's begin, everyone. So fifth one, journal entry in the books of, under that point number 1, transfer all assets which are taken over. Transfer all assets which are taken over. Or 1 second. Let's modify transfer all assets. Full stop. Strike out whatever is there later. Transfer all assets. Whenever asset reduces in our business, what do we do? Credit and debit realization. Realization account debit to assets. Realization account debit to assets. If there are 10 assets, you will write 10 assets. Student over smart, they write sundry assets. And we reduce 2 marks. So realization account debit to assets. If there are 10 line items, you will write 10 line items. Second, point number 2, liabilities taken over. Because generally they will take all the assets. But they will not take all the liabilities. Liabilities taken over should be transferred. Liabilities taken over should be transferred. So whenever liabilities reduces from your business, generally liabilities debit. So liabilities account debit to realization. Liabilities account debit to realization. Point number 3. Purchase consideration due. You will tell the debit, I will tell credit. Very good. Purchasing company, more like debtor. You have to receive money from them. No, you are selling company now. You have to receive money from them. So they are like your debtor now. purchasing company account debit to realization. Purchasing company account debit to realization. So if you see the realization account till now, we have transferred all the assets, we have transferred all the liabilities, we have transferred purchase consideration. We have booked the purchase consideration. Point number 4, receipt of purchase consideration. Receipt of purchase consideration. This is the entry where most of the students they go wrong. They do blunders here. Receipt of purchase consideration. I one by one. I don't need any chorus answer. Whoever wants to answer, raise your hand. Mac. Cash to purchasing company. No. Naman.
Realization to purchase it.
Definitely no.
Equity share.
No, raise your hand.
Shareholders account. Different shareholders. Different.
Very good. That's the common mistake which students do. Because we did 4 problems in purchase consideration. All the 4 problems we had equity and preference. What student they do? Equity share capital, preference share capital, cash account debit to purchasing company. That's the mistake. I will always have an eye there. As soon as I see the paper, first I check the purchase consideration. If amount is wrong, strike out the entire problem, move on to the next problem. 0, 0, 0. Nothing will be given. And if purchase consideration is right, next I check this. So, anyone would like to modify? Tanish?
Cash to realization.
आपके आंसर और मैं के आंसर में क्या फर्क है? Okay. Anyone? Fish.
New company to purchase.
Purchasing company is the new company. Yes, anyone who wants to attempt. A basic, minute difference, but very important. ये खुश सोचा आंसर पकड़े हुए मच्छर मारेंगे. Yes, anyone. Basic journal entry. Bhaiya, when we receive cash from debtor, cash to debtor. So here cash to purchase consideration. Mehak was right only. But develop. She said equity and preference also we get no. So then her entry should be right. Why it is not right? Come on. Manga Madea. Come on. Think everyone. I am telling the mistake what she did is very basic, very fundamental. 95% of the students they do that mistake in exam. Credit, I'll tell purchasing company. Credit is purchasing company. Mac was right. We credit purchasing company because from when we receive money from debtor, we credit them. Similarly, now we have received money, purchase consideration from them. So we'll credit, debit, think. Final hint, I'll write and show. Final hint. Rakshita said journal entry is equity share capital, preference share capital, cash account to purchasing company. Very fundamental, guys. Come on, think. 1 more minute. After that, I'll tell. You will feel very bad. No chorus answer. No, not purchase consideration. Come on, everyone.
Equity shareholders.
I don't tell bad words to girls. Anyone? After I tell you, should be ashamed. Yeah, we are in inter and we don't know. Guys, if you debit equity and preference, you are debiting your capital. So it should be equity share of purchasing company, preference shares of purchasing company. If you debit equity share capital and preference share capital, you are reversing your capital. Everyone, if you debit this account, you are reversing your capital. But here we are not reversing, we are getting shares of other company. If you debit equity share capital, it is your company equity share capital. But you are getting equity of other company. You are getting equity of other company. Everyone.
Yes.
Isn't it basic?
Liability debit.
So everyone, write the entry. Equity shares of purchasing company. Equity shares of purchasing company. Preference shares of purchasing company. Equity shares of purchasing company. Preference shares of purchasing company. Cash account to purchasing company. To purchasing company. Everyone, is it clear now? Why you should not use equity share capital? And despite me telling this, remember, I'll ask this in mock and 50% of the student will write wrong answer. You see, again in the mock, you'll write wrong answer only. Let's move on. Point number 5. Point number 5. Expenses of liquidation. Expenses of liquidation. From there, pull 3 arrows, left, right, center. Expenses of liquidation. Left, right, center, pull 3 arrows. Left side, paid and borne by selling company. Left side, paid and borne by selling company. Paid and borne by selling company. In the middle, paid and borne by purchasing company. Paid and borne by purchasing company. And right side. Hey. Paid by selling and borne by purchasing. ये होशियार बच्चे हैं. Paid by selling, borne by purchasing. Everyone? Yes. So now, paid and borne by selling, journal entry. Realization to cash. Realization to cash. Paid and borne by purchasing. No entry. Very good. Separate entity. This is selling company books. Paid by purchasing and borne by them. So, no entry. Right side. Purchasing company to cash and cash to purchasing company. Purchasing company to cash. You are paying on their behalf. So purchasing company to cash. Purchasing company to cash. Purchasing company to cash. And when you receive money from them, cash to purchasing company. Cash to purchasing company. So two entries. Next, point number 6. Point number 6. Liabilities not taken. Liabilities not taken. Now, the liabilities which they are taking, I will allow them, let it go. But which they are not taking, I have to settle journal entry. Liabilities to bank. Second entry, we have transferred only those liabilities which are taken. Which are not taken, we have not transferred. So liabilities to bank. Liabilities to bank. Liabilities to bank. Now, all the assets done, liabilities settled, etc., etc. Now, last two people left, preference shareholder and equity shareholder. So, point number? Preference shareholder due. Preference shareholder due. From that, pull 2 arrows. Preference shareholder due. From there, pull 2 arrows. Any guesses? Bunch. Left side par, right side premium. Left side par, right side premium. So par, you tell debit, I'll tell credit. Hey, you will tell debit and credit both. Redemption of preference share is over. CA Foundation. Preference share capital to preference shareholder. Par. Preference share capital to preference shareholder. Preference share capital to preference shareholder. Right hand side. Preference share capital account debit. Realization account debit. Preference share capital account debit. Realization account debit. Realization account will be debited for premium. Realization account will be debited for premium. So preference share capital account debit. Realization account debit to preference shareholder. To preference shareholder. Point number 8. Hey, payment to preference shareholder. Payment to preference shareholder. Payment to preference shareholder. Once again, no chorus answer. Anyone who wants to answer, raise your hand. Anyone who wants to answer, raise your hand. No chorus answer. हाँ दर्शन किसने शेयरहोल्डर टू बैंक ये फाउंडेशन बच्चे ही एंट्री बोलते हैं आपका इंटर खत्म होने आ गया 20 डेज में वन हाँ very good. See, that's why I hided the earlier entry. We got this preference shares. This we will give to our preference shareholder. This will give to our preference shareholder. So general entry, preference shareholder account debit, preference shareholder account debit to cash. If you are giving them cash, then to cash. To preference share capital of purchasing company. Preference share capital of purchasing company. Everyone. Now, in one of my key answers, the journal entry was preference shareholder to cash to preference share of purchasing to equity shares of purchasing. Students are fighting via wrong entry. Is it possible? Yeah. If your preference shareholder, you are giving equity of purchasing company, then this entry is also possible. This entry is also possible. But we are not going too deep here. Last. Ninth. So, realization profit. All entries in realization over. Realization profit. Journal entry. Realization to cash. Same dissolution. Realization to cash. Sorry. Realization to equity shareholder. How profit you will record cash. Realization to equity shareholder. Realization to equity shareholder. Final two entries. Point number 10. Equity shareholder due. Equity shareholder due. Yes, debit. Equity share capital account debit. Equity share capital account debit. Equity share capital account debit. Reserves and surplus account debit. You have to reverse your reserves and surplus. No, that also belong to equity shareholder. Equity share capital account debit. Reserves and surplus account debit to equity shareholder. To equity shareholder. And Bhaiya, if we want, can we merge 9th and 10th entry? You can. But just to ensure for profit also we get step marks, I have segregated this into 2 entries. Last, payment to equity shareholder. Payment to equity shareholder. Yes, very, very simple. Come on, everyone. Equity shareholder account debit to equity share of purchasing company to cash. Equity shareholder to equity shares of purchasing company to shares to cash. भूख लगी है मेरे को. Everyone, simple. So now, let's say for example, we will take a scenario of this problem. This problem is very small. We'll take this problem. Now, first entry, what do? We transfer all the assets. So first entry itself, balance sheet asset side will get closed. Then second entry, we transfer liabilities. Here itself, all this closed. Everyone. Then what happens? You receive purchase consideration, and whatever you receive, you distribute to equity shareholders, to preference shareholders. Everyone. So when you are distributing, this too also gets over. In other words, selling company balance sheet is wiped off. Selling company balance sheet is wiped off. You will not have selling company balance sheet anymore. Everyone. Yes. So, and that balances will be transferred to purchasing company, that we'll see in tomorrow's class. Everyone.